Welcome to Money Talk with Michael. I'm Michael Eastham, president of Fellowship Financial Group. Money Talk with Michael is our weekly broadcast where we answer your questions about finance, investment, retirement, and all things related to money. Remember to send in your questions to the email listed in the description box below, and you might hear your question answered on the next Money Talk with Michael.
I have a whole life policy for 30 years, and it has a cash value of about $80,000. The death benefit is $200,000, but I don't really think I need any more life insurance at this point. We have no debt. Social Security and my investments will provide plenty of income for my wife and I'm wondering if there's something else I can do with this cash value rather than just let it sit there. I still pay a few $100s a year, but the rest of the premium is covered by dividends.
All right, this is a little bit of a tricky one, and I don't have a lot of information to give you a thorough, specific answer, but I can certainly generalize because it really is a good question that a lot of folks have, and I think there's some good opportunity for you here. One thing that you may want to think about is that cash value, that $80,000 that you don't really need right now. Consider a long-term care policy. That could be something that could benefit you way down the road, even though you don't necessarily need the money right now, or you don't think you'll need it in the future. Because there are certain types of long-term care policies that are simply asset-based. In other words, it's like taking that $80,000 and you let the insurance company hold on to it for the foreseeable future. If you need it at some point down the road, then the entire $80,000 may be available to you. If you need it for long-term care, well, guess what? That $80,000 will triple or quadruple in terms of the ability to cover you in a long-term care facility, or if you want to have long-term care at your home. You see, the benefit that the insurance company can provide is take your $80,000 and you may not need long-term care until you're 80 or 85 years old. Well, that $80,000 benefit could be leveraged to $250,000 or $300,000 worth of long-term care benefit at some point down the road. So this is particularly useful, not just for folks who have a whole life policy or a universal life policy like you talked about here, but for folks who have idle cash and you're really looking for a place to park that money for a period of time. It's still your money. It'll always be your money. But if it's positioned properly, then you can use the insurance company to leverage that benefit in the event that you need long-term care at some point down the road. Again, there's lots of different ways that you can think about it, but that's a great way to consider the use of that policy, especially if you don't need the death benefit. And if you have other questions, I'd love to help you out in more detail. Thanks so much for that question. Thanks so much for watching. Tune in next Monday for another edition of Money Talk with Michael. And don't forget to send in your questions and check out our website at fellowshipfinancial.com and our social media platforms. And if you'd like, you can schedule a 15-minute complimentary call to get your specific questions answered. Everything you need is listed in the description box below.